Welcome everyone to Rethinking Agri-Business Investments Through the Pandemic, a series of 4 interesting platforms staged online for us by CASA, the Commercial Agriculture for Smallholders and Agribusiness program funded by UK Aid. CASA seeks to change how investors, donors and governments view and invest in agribusinesses that work with smallholder supply chains. You can find out more at casaprogram.com. Today is a wrap-up of our first platform, when we discuss the practical impacts of the crisis of value chains and systems. In the following weeks, we will consider how agribusinesses and investors are adapting to survive, how do we manage the environmental and public health aspects for agribusinesses, and the fourth platform will consider the future scenarios and investment opportunities. Before we get started today, please allow me to mention some points about organization. Please turn off your video and remain muted. A recording will be shared afterwards, and for those that want even more, please follow the link in your invite or on the Hoover app to the excellent dossier of stimulating documents for this platform. Today's wrap-up session will be 30 minutes long, maybe a little longer, see how enthusiastic we all are. We have 4 of the speakers back again from last week, and today they will be discussing some of the questions that you have already asked. However, please continue to participate as before in the Hoover app, or you can send your questions in to our Zoom question master for the day. Participation can continue after today as well, as the platforms will remain live on the Hoover app all the way through to the end of the series. I want to summarize a little bit what we learned last week. It's pretty difficult, but I've got a list of things that I think stand out. So in that impact platform, we learned a lot, but in summary, smallholders are vulnerable because they're not connected to information about changes in the market system and because they lack social power. Labor constraints are having a large effect on businesses. And C-19 has come on top of existing crises, locusts, low commodity prices, conflict. So it's difficult to isolate the impact due just to the pandemic. Public health response measures increase the cost of business. Breakages in logistics, reduced access to finance, reduced demand, all negatively affect smallholder farmers and the agribusinesses connected to them. It's very important to get information from sources with good connections to the field. Agribusinesses have not all been affected the same way. CASA is doing some very interesting rapid market assessments to understand the impact of the pandemic and how businesses can respond. And there's a nutrition impact on consumers. And we also learned that women are disproportionately affected by the pandemic. So let me just reintroduce the 4 speakers we have today. Aviva Kutnik is the Division Chief for Markets and Finance in USAID Bureau for Resilience and Food Security. Dr. Shenggen Fan is Chair Professor at China Agricultural University, working on global and Chinese food economics and policy. He's the former Director General of the International Food Policy Research Institute. Dr. Bettina Prato is Senior Coordinator of the Smallholder and Agri-SME Finance and Investment Network based at the International Fund for Agricultural Development. And Hans Mazura is the CASA Country Manager in Uganda. So welcome to all the participants and to the speakers. So I'll turn first to a question that's been raised and pass to Bettina, if I may. Bettina, what is the impact of the pandemic on working capital flows in food systems? For example, traders not having the bandwidth or liquidity to keep playing an active role in financing farmers' activities. This is an informal aspect that they have in the system, but what do you think is the impact of that on food systems? Thank you.
Can you see me? See me and hear me?
Well, yes.
Good. So I hope you're not going to see children moving in the background on the video, as working from home also has this, little perks. So thank you for this question. Quite important to consider that much of agricultural finance, particularly finance that reaches small and medium enterprises and smallholder farmers, that are, the population group of particular concern to us, is really transacted through value chain relations. So the way in which the pandemic and the responses taken by governments to it in the short term are really impacting the ways in which supply chain relations work, and therefore also the fundamentals underpinning the flows of value chain finance, which is incredibly important for working capital in particular. So what we are observing is that it's important to consider sort of the impact on working capital, which is, you know, across the board an impact of increasing pressure, with all the context specificities and commodity specificities we discussed last time. In this context, it's important to consider not just what happens at the farmer end of the supply chain, but what happens all at the various in the various links. So very frequent sources of value chain finance or intermediaries in the value chain finance process are agro-dealers, you know, the input suppliers or the buyers. And what we are seeing is that many of these face situations where they have inventory that they're not able to sell, or receivables that they're not able to cash in. And, you know, facing logistical problems, you know, so problems also in ensuring that that inputs, you know, sort of bulk inputs are made available, you know, at the retail level, where, you know, the agro dealers directly dealing with small and medium enterprises or producers are located. So there's, you know, these pain points in the value chain that are impacting on the flow of finance that is value chain mediated. And then, you know, we're also seeing pressure points in terms of access to more formal sources of working capital. And it's not by surprise. I think that many of the measures that we're seeing across countries on the part of government and financial institutions are really trying to address working capital concerns in the first instance, whether it's through capping or reducing interest rates, or by providing one-off grants, or by sort of renegotiating repayment terms. You know, because it's well understood that working capital is really the oil that keeps the machine of investment running. So a very critical intervention point.
Thank you. One of the comments that's been coming out in other fora is that in this time we found that partnerships which have existed in the past and are still existing today have had to adapt very quickly, and people have been surprised at how quickly the adaptation has been possible. Have you found that financial institutions have been able to sort of change their rules of engagement with their customers and with the agribusinesses faster than one could have previously imagined, changing interest rates, changing terms of loans, suddenly realizing we need to act, let's do it now? Because banks and financial institutions do have a reputation for being a little bit cautious and careful and taking time. Are you finding speed is happening, or speed is not possible?
You know, it depends who you ask. You know, in the service that we're been sort of gathering also from the partners in our network that represent financial institutions, it's quite impressive to see how many financial institutions are taking measures. In many cases, also supported by policy mandates or by injections of liquidity, sort of, you know, rebates in repo rates. So, you know, a significant role of central banks. How many of the former financial institutions are taking measures? We talk to impact investors. It's the same. You know, they're really trying to find creative ways to keep their loan portfolios going to support the companies that they're investing in. You know, they're also trying to sort of mobilize additional sources of finance to keep themselves capitalized and, you know, sort of to mitigate the risk exposure. So a lot is happening. Now, when you talk to, you know, the companies, you know, the farmers organizations also that we have in the network, the constraints in terms of access are still quite common. So I think a lot of measures are being put in place, and they were put in place also quite fast in some countries. Let's think about China, for example, but also other countries like Brazil. You know, so looking at many countries in Central Europe, Eastern Europe, even my own country, Italy. But then the meeting point between measures being put in place, sometimes also quite rapidly, and the customers also being able to access those, it's still it's still slower, whether it's because of logistical restrictions or just because many small enterprises actually have issues in fully understanding what their balance sheets look like and what their needs are. There's due diligence challenges right now in dispersing new loans. So getting that money out is not happening as fast as would be ideal. But the speed of putting in place measures has been higher than what I would have expected.
Okay, thank you very much. Thank you. We could talk a lot more about that, and maybe I'll come back to you a little bit later on because there's a lot of detail. I was enjoying watching the YouTube recording of last week's platform, and I encourage anybody to go back and read it. There was a lot that was said, and it's worth listening to it again to get all the details that were said. Thank you. Hans, I'd love to know more about what you're thinking and finding, because you're working in CASA, which is working in several countries. What do we know about how governments are responding to the impact of the pandemic in agribusiness investment? And where is that leading to positive response or not so positive response? What do we know about how governments are responding to the impact of the pandemic in agribusiness investment in particular? Thank you.
Thanks, Julian, and good afternoon, listeners, participants. Yeah, like Bettina just said, the two pinpoints, two areas, that the huge focus is on, both on the private sector and the government, is on the logistics and supply chain, as well as cash flow. I think those are the two areas that have really impacted the agribusinesses in Uganda, and both the private sector and government are coming out with interventions. You've asked me what we think government is doing. Government has come up with measures to address those two critical areas, cash flow and liquidity, as well as disruption of the supply chain. In Uganda, as you're aware, we have got a lockdown that has been on for the last 5 weeks. It was just extended for another 2 weeks last night. But good to say the agriculture sector has been identified as a what we call essential area, and trucks supplying inputs are exempted from the lockdown. So these are allowed to move, both for supplying inputs as well as buying the output from the farmers. So that's a positive step from the government, ensuring that there's still the flow of goods, both inputs and outputs, are not affected. Although, of course, different commodities have been impacted differently because of consumer behavior. The government has come up with the emergency food distribution program, which is has benefited those, for example, in the bean sector, who are supplying the beans to the government to supply to the vulnerable population. But you'll find that a sector like poultry, eggs, I think the price has fallen by over 50%, because again, not so many people, and as well as the tourism sector, which is a big consumer of some of the agricultural products, is in limbo. So, but government at least has come up and is addressing the issue of the logistics and supply chain. There's been an issue of the truck drivers coming in. I think almost half of those tested for COVID positive in Uganda were truck drivers bringing cargo, and the government is exploring on how to revamp the railway sector, because as the president said, that would, it's cheaper, it's also less burden to the, to the roads, but also you are able to bring in services, bring in goods, as well as take out exports without a lot of hindrance, like what is happening with the trucks. A lot of our cargo is goes to the port of Mombasa and by truck. A lot of our imports coming by truck, but for the delivery of inputs to the farmers for this season, again, a lot of the areas are already planted, but they still need pesticides and fertilizer. Government has given a waiver for trucks. For cash flow and liquidity, the government is addressing liquidity issues in most of the banks in Uganda that have been lending to the agribusiness sector, and they are providing exceptional liquidity assistance to commercial banks that are in liquidity distress. For example, buying treasury bonds from the microfinance deposit taking institutions. They have also, government is exploring negotiating with on repayment of the country debt. Uganda, I think, pays almost 5 trillion in debt yearly, and government is trying to discuss with multiple lenders to grant a debt standstill, a 2-year moratorium. So there, you're looking at, if that is granted, then government would be saving almost 10 trillion Uganda shillings, which it would channel into SACCOs, savings and credit organizations, or village savings lending associations that are composed a lot of farmers who would now, be able to address some of the cash flow issues they're having.
Thank you,
we've seen, yeah.
I have a follow-on question, and perhaps Bettina, you might like to answer this in a moment as well. But first to Hans, are you finding, Hans, examples where governments are able to more easily respond to this crisis because they have existing channels for dialogue with the business community? And in other places where those channels are not so alive and not done in such a strong partnership way, that it is harder for governments to know what to do because they're less informed, and they're also less aware of what is the nature of the crisis, not just surface level, but the secondary and tertiary level below. So to what extent do channels of communication between government and businesses assist governments to understand the nature of the crisis?
Absolutely, Julian. If you see in Uganda, government is, a lot of ideas are coming through what we call the Private Sector Foundation Uganda, that is composed of manufacturers, exporters, importers, that are giving all these ideas to government. Government, like they say, is not into business, but having strong associations, the Bankers Association, as well as the Private Sector Foundation, as well as the Uganda Manufacturers Association. I know there's a lot of push on import substitution, and government has to rely on the experts in the private sector.
Bettina, would you like to comment, please?
Am I unmuted? Okay, thank you.
You are.
So, it's interesting to hear this about Uganda. I think that we're seeing quite a bit of that across the board. But I don't think enough of it is really happening. So from the countries where, I've heard reports from our partners, there is, yes, there are, in many countries there are platforms, for public-private dialogue, also around agricultural investment. Some of those you will also be very well familiar with, Julian, from the set of platforms also facilitated by the World Economic Forum, for example, the Grow Africa, Grow Asia, related country platforms in Colombia, India, etc. And in some situations, these are actually also being used themselves, but there's others. And yet, I don't think that enough is happening, particularly to bring in the perspective of the companies, the parts of the private sector that work on logistics or on the input supply side of the value chain. There's more of a conversation with those that are working, in production, in processing, in retail, in what I'm observing, and not enough maybe with these other parts of the sector. Another area where there is certainly scope to improve dialogue is with private finance, whether it's impact-oriented private finance or commercial finance. You'll see that the countries that have more of a history of government involvement, also in agricultural finance in general, things are moving more rapidly, more smoothly. There's more of an influence. possibility, but also more understanding of what the constraints are at the financial institutional level. In others, the understanding of the constraints is not actually showing in policy dialogue, in policy making as much. So yes, happening, and happy also to hear about the experience of Uganda. But there's parts of the private sector that I think still need to be better engaged in the dialogue process.
All right, great. Thank you very much. Thank you. Yes. We could have a whole session just on talking about public-private participation and dialogue, and whether or not they work well, and actually who is involved, and whether it's just certain types of organizations as opposed to all types of businesses. But just to all the participants, a short note to say that we've unfortunately received apologies from Dr. Fan and Aviva Kutnik. They've due to unforeseen circumstances in these unpredictable times, but we'll carry on just for a little bit longer with Bettina and Hans and then come to an end. Bettina, I'd like to ask you about something that I know is a very important agenda item for the International Fund for Agricultural Development, where you're based, and that's the role of women in agriculture and agribusinesses. And we know that they are disproportionately excluded from business and from many other aspects of society. And we can safely presume, and maybe there's some good evidence already available to show that they are disproportionately affected by this pandemic. But the question I have in mind is, how is that influencing or affecting the way in which businesses are likely to act, or investors are likely to act? Do you think that this may cause businesses to start to do more to help women to be more included, to change the way they provide their services? Or maybe investors may come forward and say, well, we want to invest particularly for that social inclusion purpose. What do you think? Somebody needs to unmute Bettina, please. Thank you.
Thank you. I think it's my fault, because whenever I stop speaking, I just automatically mute myself, and then you need to actually intervene. So we're actually beginning to hear a bit of that, COVID-19 is disproportionately impacting on women in value chains, but also women, in rural households, for example. There's evidence that is being collected by IFAD as well. There's the question of disproportionately affected is always sort of a debatable one, of course, but within the rural households, of course, women typically face multiple demands of their time, and they have to bear a disproportionate share of the burden of care activities, which at this particular point in time is certainly a compounding factor alongside others that that the crisis is bringing to bear on food security, on economic activities in rural households. So it's certainly there. I'm already beginning to hear from particularly donors, and certainly IFAD itself, as being interested in looking at this specific aspect of the impact of the crisis. And I think we are likely to see it continuing to be a theme in the responses of some of the social entrepreneurs and impact investors that are particularly sensitive to this theme. But beyond the gender issue per se, I think it's also important to consider that women typically are more represented or less represented in specific activities within the supply chain, whether in sort of some of the more labor-intensive activities, in some aspects of the processing, etc. So it's important to understand what is the impact of the crisis and of the lockdowns on labor. Sort of on the possibility of mobilizing labor at specific points in the supply chain, and how this is going to have gender differentiated impacts, as well as on, small processing activities, for example, in specific value chains. So it's difficult to, in my view, to think about what could be a gender-specific or a women-focused response or set of investment measures in the crisis, it's easier to think about it in terms of what are the types of roles that are typically more gendered, and sort of what sort of pain points in the supply chain do they correspond to, and then to see whether there can be a business case created around addressing those pain points, which is likely to be the case. But again, that's the way in which I would look at it, rather than as gender issues per se.
Thank you very much. Thank you. Yes. We've had a good conversation today, a good wrap up, and there's been lots of other questions that have come. Naturally, a lot of the questions are leaning more towards what can we do, as opposed to what is the state that we find ourselves in the world. And in the presentations we had on Thursday, there was a theme coming through about digitization of services. And without going into that in too much detail now, I'll just encourage everybody to tune in for our next platform, which is talking about support, where inevitably digitization will start to be discussed a lot more. In fact, some of the panelists that we have expertise in that. We've got somebody representing Omnivore, which is a venture capital company in India. We've also got some speakers, a speaker from IFC. We've got somebody from Bain & Company as well, which that's a consulting firm that has a wide range of experience that can draw that experience into this work. I won't go into too many details who we've got. I'd encourage you to go into the Hoover app and to follow the notices that we will all receive for the next event. But thank you very much to the speakers today, to Hans and Bettina, and apologies from your colleagues who weren't able to make it, unfortunately. And also thanks to the participants for coming along and for continuing to be engaged online so that we can help each other to get to the bottom of this and to respond to it. And I think, as Judith Batchelor said, our keynote speaker last time, let's come out of this better than when we were when we went in. Let's see if we can build a better global food system that is better in all the ways that we wish. I won't list all the adjectives about sustainable and inclusive, just better. It's an opportunity for us to do better. So that's the end of the wrap up, and this is the second of our 4 platforms, or the second will come soon, and that's focused on support. The panel will explore practical ways that impact investors and
Sorry, I think we have lost Julian at the moment, but yeah, so we will continue on Thursday at the same time with the support platform. We have a fascinating panel, and we welcome you all to join us, and please ask questions as you have done on this occasion. I think we have Julian back on the line. Julian, I was stepping in for you at this point, but basically to thank all of you for spending this half an hour with us today. And we look forward to seeing you again very soon. Thank you very much.
Indeed. Thank you.